You feel it, don't you? That grinding friction. The stock you bought, the one with the perfect story, the flawless earnings report, the chorus of experts singing its praises. It refuses to move. It feels like you are trying to push a train uphill. Every small gain is met with a wave of selling. You check the news, you reread the reports, you double down on your conviction. You think, the market is wrong, it has to see what I see. You are applying force. You are fighting. And you are losing. You are losing capital. And more importantly, you are losing your mental peace. You are working against the single most powerful force in the entire market, the line of least resistance. The human mind is a flawed instrument for speculation. It is designed for certainty, for cause and effect. You believe that because A and B are true, C must follow. Because a company has strong fundamentals, its stock price must go up. This is the logic of an engineer, not a speculator. The market is not an engine, it is a living, breathing creature, driven by the mass psychology of millions. And the primary flaw in your thinking is ego. You want to be right. You have done the work. You have formed an opinion, and you have staked your money on that opinion. When the price action disagrees, it is a personal affront. You feel a compulsion to prove the market wrong. You hold a losing position, not because the evidence supports it, but because selling would be an admission of your own failure. This is why intelligent men who are successful in every other field, come to Wall Street and suffer financial ruin. They bring their ego, their need to be correct, and they try to impose their will upon the tape. The tape does not care. The price is the ultimate truth, and it will always follow the path of least effort. Your job is not to carve a new path, but to find the one that already exists. I learned this lesson the hard way, as all important lessons are learned. I was in Palm Beach taking a much-needed rest. But a speculator is never truly at rest. The game calls to you. I became interested in cotton. I studied the conditions, the statistics, the demand. Everything pointed to higher prices. I was convinced. I was bullish. So, I began to buy. I bought 50,000 bales. The market did nothing. It just sat there. I waited. The news that came in was all bullish, exactly as I had anticipated. Logically, the price should have advanced. Instead, on every small rally, I saw selling emerge. The stock did not feel right. It was like a man who is sick. He may look fine on the outside, but there is an internal weakness. I couldn't put my finger on the reason, but the tape was telling me a story that contradicted my logic. It was telling me that the line of least resistance was not upward. I had a friend, a very shrewd old cotton trader. I went to him and said, "I'm long 50,000 bales of cotton, and I don't like the way the market is acting." He listened to my reasoning, my bullish arguments. He agreed with them all. But then he said something I never forgot. He said, "Jesse, if you feel that way, sell it. Get out." He didn't argue with my logic. He addressed my feeling, the instinct born from years of watching the tape. I took his advice. I sold my entire line. The moment I was flat, my mind cleared. The burden of being right was lifted. I was no longer a bull or a bear. I was simply an observer. And as I watched the tape with clear eyes, I saw the truth. Despite all the bullish news, the market could not rally. There was a great unseen weight holding it down. The path of least resistance was downward. I then sold 100,000 bales short, and shortly after, the market began its great decline. I did not fight the tape. I listened to it. It told me the path of least resistance had changed, and I followed. It was not my thinking that made me that money. It was my recognition of the market's true direction, a direction of ease. If you want to understand the true psychology of speculation, you must read the one book that defines the game. I am talking about Reminiscences of a Stock Operator. It is not historical. It is a permanent education in human nature and market cycles. The book is pure truth. Get your copy today. The link is in the description below. This principle is not some relic of the past. It is more critical today than ever before. You sit in front of your screen, bombarded with information. News feeds, analyst ratings, social media chatter. You build a case for a stock, let's say a leader in the semiconductor industry. The company just beat earnings estimates, raised its guidance, and announced a breakthrough in chip technology. The story is perfect. You buy the stock expecting it to soar. Instead, it barely moves. The next day, it's down 1%. The day after, it tries to rally in the morning but closes at its low. You are confused. You are frustrated. The news is bullish. Why isn't the price responding? This is the market speaking to you. It's telling you there is resistance. Perhaps large institutions are distributing their shares. Perhaps the good news was already priced in. Perhaps the entire sector is weakening. The reasons do not matter. The fact is that the upward path is a struggle. The line of least resistance is not up. The amateur speculator holds on. He tells himself, it's just a pullback. The market is irrational. It will catch up to the news eventually. He is a man arguing with a storm. He is trying to impose his will. The professional speculator sees this lack of response as a clear signal. He sells his position perhaps for a small loss or a tiny gain. He steps aside and waits. He knows that when the time is right, the stock will move effortlessly. When a stock is ready to advance, it will do so with ease. Bad news will be ignored. Small dips will be bought instantly. The price action will feel buoyant, light. That is the line of least resistance. Consider the opposite. Think of a downtrend in a major index like the S&P 500. For weeks, the index has been making lower highs and lower lows. Every piece of positive economic data, every hopeful speech from a central banker produces a weak, short-lived rally that is quickly sold off. The market simply shrugs off good news. That is the line of least resistance telling you, screaming at you, that the path is downward. The sucker buys these dips. He thinks, it can't go any lower. It's cheap now. He is fighting the trend. He is fighting the current. The speculator, however, either stays out or goes short, aligning himself with that powerful downward force. He is not smarter than the sucker. He is simply more humble. He does not presume to know more than the collective judgment of the entire market, which is expressed in one thing and one thing only, the price on the tape. You must burn this into your mind. Prices move along the line of least resistance. They will do whatever is easiest for them to do. They will go up if there is less pressure selling than there is buying. They will go down if the opposite is true. Your job is not to predict, not to hope, not to argue. Your job is to identify this line and to place your bet accordingly. How do you identify it? You watch. You test the market with a small position. If you buy and the stock immediately moves against you with force, you are likely on the wrong side of the line. The resistance is palpable. You must cut your loss without hesitation. If, however, you buy and the stock moves easily in your favor, showing a quick profit, you have likely found the path. This is the time to add to your position, to press your advantage, to pyramid. You're not pushing the train uphill. You have hopped aboard a train that is already moving downhill with momentum. This is why charts are useful, not as tools of infallible prediction, but as historical records of this struggle between buying and selling pressure. A breakout from a long period of sideways movement is simply the market finally choosing its line of least resistance. For months, buyers and sellers were in equilibrium. Then one side gives way. The price surges through the old resistance level, and now the path of least resistance is clearly upward. To buy at this point is not to chase the price, it is to align yourself with the newly established trend. The public sees a stock that has already gone up and thinks it's too high. The professional sees a stock that has overcome resistance and thinks, the path is now clear. Stop thinking of the market as a riddle to be solved. It is not an intellectual puzzle. It is a test of your discipline and your ability to suppress your own ego. The greatest obstacle you will ever face in your trading account is the person who stares back at you from the mirror. He is the one who wants to be right. He is the one who holds losers out of hope and sells winners out of fear. He is the one who argues with the price. You must silence him. You must become a dispassionate observer of reality. The tape is your reality. The line of least resistance is the law of physics in this universe. You can either obey it and profit, or you can defy it and face financial ruin. The choice is yours. Stop fighting. Start listening. Follow the path of ease. That is where the big money is made. It always has been and it always will be.